Carnival Cruise reported earnings this morning. They are down 2% right now. This was one of the stocks that got really beat up during COVID. So they reported they had an expectation of $1.17 per share. They came in at earnings per share of $1.27. That is a very big beat. Expectation for revenue, $7.81 billion. They came in at $7.89 billion. Hearing both of those things, you would think that this number would be positive. Right now, it's down 2%. So let's get into the press release and see why exactly is this thing down. Now, the first thing that I looked at here, I'm seeing the word record all over this press release. So third quarter income was $1.7 billion, an increase of 60% compared to 2023. Wow. Third quarter revenue hits all-time high of $7.9 billion. And if we just come over here, go to the income statement, come down to quarterly, guys, look at these numbers. Look at these revenue numbers per quarter. The previous high was August of 2023, $6.85 billion. They came in at, what did I just say, $7.9 billion, up $1 billion compared to the year prior. Unbelievable. And you can see, let me just keep going back. Let me go back pre-COVID, just so we can see here. Let's go, okay, so this is 2017. Look at this. There's not even close to a 7 on this thing. Let's go up here. Let's go 6.53. Then COVID happened here. Obviously, you can see when they dropped to $740 million and then $26 million in a quarter. And they just did $7.9 billion. So that is absolutely amazing to see. As a result of strong demand and cost-saving opportunities, it raised its full year 2024 adjusted EBITDA guidance approximately $6 billion, up 40% compared to 2023. Cumulative advanced book position for full year 25 is above previous 2024 record with prices. So this to me is why quarterly earnings don't really matter, because I'm seeing a lot of good things. As a person that invests in value, I'm looking at this reading, okay, everything is going really well here. Well, we're only about a page in, but everything so far is going really well as far as the highlights go. I don't care about this. This is telling me some type of story. Now we're going to have to go look at see what's going on with the shares outstanding, because that was a whole different story. We're going to have to see what's going on with the debt that they issued, a whole different story. But these preliminary things are why I don't worry about this. They have beat on earnings per share, beat on revenue. They have half of 2025 already booked on their ships. Their same ship sales, this is basically same store sales, so they're not going out and buying new ships. Same ship sales are up significantly. Guidance is really high, and the stock price is down 2%. That's why I don't care about this reaction. Now let's go and see if we can actually find the reason. We talked about third quarter already. Gross margin yields increased by 19% compared to 2023. Net yields exceeded 2023 levels by 8.7%. Let's see. Cruise costs per available low berth day increased 3.4%. I don't know what that means. Adjusted. Okay. Total. Look at this one. Total customer deposits reached a third quarter record, $6.8 billion, surpassing the previous record of $6.3 billion. So they came in $500,000 more. Just amazing. Bookings with nearly half of 2025 booked. Guys, we're basically in September 30th. We're in the last day of September, and they have half of 2025 already booked. Now, I don't know if that's a normal thing. I've never been on a cruise in my life, but have you guys been on a cruise? Do you book it super early? I don't know. So maybe you book these things super early, but I'm looking at this saying with nearly half of 2025 booked, less inventory remaining for sale than the year prior. We're leveraging strong demand to achieve record ticket pricing. So they're going to raise prices because they can. 2026 is off to this is unbelievable. 2026 is off to an unprecedented start, achieving record booking volumes in the last 3 months. So people, obviously, they book these things very far in advance. Now, 2024 outlook. Net yields, do we say, is there anything in here that I've continued to leverage? Okay. So to me, guys, this is why this kind of stuff doesn't matter. I don't even know what the reaction is here. This is probably something I would go on Twitter or X and see what is going on. But if I just look at some of these preliminary things, let's go back to the income statement. And I want to go on an annual basis. And I just want to show you guys the big problem that I had. So in 2020, Yes, it was 2020. It was right in here. I was investing, actually, it wasn't 11, it was probably 4. It's probably April of 2020. That's probably when I was investing in Carnival Cruise. Why? Because my thesis was, okay, Carnival Cruise is going to come out of this. Yes, the government basically shut down their ship, said you can't cruise. If you go on a ship, you're going to get coronavirus. That's basically what was said. Now, I didn't think that they would go from 775 million shares outstanding to 1.12, 1.18, 1.26, 1.27 billion. You can see that they've finally slowed issuing shares significantly. But I didn't think that that would happen. I didn't think that they would take on as much debt as they took on either. So when these things started happening, stock price ran up. I actually made a pretty penny on this thing, which I was very fortunate for because I sold around $30 a share after buying around 10 or 15. I don't really remember. But the point is, the thesis changed. Now, what's the new norm? Are they going to be buying back shares? Are they going to bring this thing back to normal levels here? You can see, guys, from 2014 to 2020, you can see that they didn't really do it. The shares stayed consistent. Yes, they bought back shares at some points. They diluted you at some point, but they stayed relatively consistent within that 5-6 year range. I don't think this is normal. I think they're going to buy back shares at some point, especially if they continue to drive profit and revenue with these numbers. They realize they had to do this, in my opinion. They had to do this to survive. To me, the government was just basically, the government should pay for this. I'm not into the government paying for anything, but the government should be paying for this. This is nonsense. It is absolutely nonsense that they shut down that business like that. The point is, they are going to have to get back to that 775 million shares outstanding. Maybe it's going to be 800 million shares outstanding. Let's see what the analysts have to say about them. Look at that growth. That's pretty crazy growth. And look at, here we go. More than doubling. That's great. I think we're getting back on track. And the nice thing about Carnival, revenue, I mean, this is getting back. They're at record revenue per quarter right now. No, it's not insane growth, but I do think that this is really good growth for a company like this. It shows stabilization, and that's what I always talk about. Where are these companies going to stabilize at? Let me look at the pillars real quick. And this, I wanted to show you guys. These pillars usually tell you a story, right? Well, this doesn't tell me any story because shares outstanding. This, without COVID, wouldn't have happened. They weren't diluting 78. They weren't issuing 78% more shares. Free cash flow, this was not happening without COVID. ROIC, not without COVID. Not without COVID. This, whole different story, not without COVID. Even the revenue growth, that's not actual realistic revenue growth because they have had to come off of 2020. Net income growth, same story. So the whole thing about the 8 pillars here, not very helpful. Not very helpful when you find companies like this. Now, I would want you all to pay attention to this today, and I actually implore you and go and see what's the excuse for being down. You can see that it's climbing back. We were down about 2.5% when we started this video. Now it's down about 1%. But it's very interesting to see a top and bottom line beat. Every single thing in the earnings report came out very well. Maybe they said something on their earnings call because they reported probably 4 hours ago, 3 hours ago at this point. Maybe something was said that sent the stock price down. The point is, don't focus on quarterly earnings, except if it's to figure out the story for the long term. So guys, thank you for watching. Subscribe to the channel. We're going to have Nike earnings coming out tomorrow. We'll see you then.